sponsored by the Securities and Exchange Commission of Nigeria.
Hello, you're watching Eye on Nigeria's Capital Markets, this program that tracks activity in West Africa's oldest and largest stock exchange and its broader capital market. I'm Wale Famrewa. The growing interest of foreign investors and government programs designed to address Nigeria's infrastructure deficit is creating the atmosphere for the creation of specialized funds. Now, these funds pull together resources from a variety of investors, and issuers and fund managers then invest these funds in a variety of assets, including the stock market and infrastructure projects like the road I'm standing on right now. On our program today, we examine the type of products that are being created.
If you look at specialized funds, or what they call specialty funds or sector funds in other markets, there are various factors that are driving the development, or what I can call the emergence of these funds. And increasingly, they're becoming a very important segment, even in the mutual fund industry in developed markets. But coming down to Nigeria and our own specific context, you start by looking at investor appetite. Investors are beginning to appreciate the need for diversification. And to achieve this diversification, the investors need access to various sectors, various asset classes, various product types, etc. In summary, investors need an opportunity to be able to express their risk appetite and return aspirations in their asset allocations. And how do you do that if you don't have access to the relevant asset classes?
In recent times, we've seen emergence of a lot of specialized funds, and this has particularly been in the aftermath of the stock market crash. We've had inquiries and applications, and we find that some of the drivers of these funds are the desire for investors to have new products in the market. And when they come to the market, they find, look, there's limited products which they can invest in. And the operators themselves, the fund managers, have been very innovative. They've come up with all kinds of products that will satisfy the appetite of their investors. And then we think one of the other things is that, you know, PFAs have a lot of funds in their hands. With the coming of the industry, formalization of the industry, you find that they have limits in the various sectors they can invest in. There's a limit to the amount they can put into equity, a limit to the amount they can put into bonds, housing, and all that. So the fund managers too have been very innovative, coming up with products that will satisfy the guidelines and the regulations that PENCOM has set, and at the same time to meet the investment appetite of the pension fund administrator.
First of all, you have pools of funds available from the pension space, and if you look at their guidelines, there are dedicated allocations to, you know, specialized funds. So they do have things such as from mutual funds to infrastructural bonds to private equity. Investable funds have grown literally from zero in 8 years' time to over $22 billion, and growing probably over 25%, you know, per annum. You know, so there's a huge pool of money that can actually, you know, affect lives and change society.
If you look at the Nigerian scenario, our industry is still at an infancy stage. If you look at the mutual funds that are, public mutual funds that we have now, a significant percentage of those funds are equity funds, plain vanilla funds. You only have one or two REITs, some money market funds, etc. But so that shows you the kind of room or the kind of void that specialty funds are there to fill.
For us at the Securities and Exchange Commission, we've always said that we're committed to ensuring that we have a world-class market, and having specialized funds is one way of expanding the options that are available to investors in terms of the instruments that they can leverage to tap the opportunities that Nigeria has to offer. Take, for example, infrastructure funds, which are specialized funds. Take the situation that we face in Nigeria today, where there are huge deficits in terms of infrastructure, because in the past we've really been underinvested. Take the fact that the federal government is prioritizing investing in infrastructure. It would be a pity if we're not able to register infrastructure funds, because whether it be pension funds, whether it be insurance companies, it is a natural instrument for these types of investors, particularly because the cash flows are predictable. You can have long-term streams of cash flow. The returns are reasonable, and in some cases, it can be counter-cyclical. So clearly an opportunity.
Now, in terms of the deficit, a key driver for infrastructure demand is actually population growth. Nigeria today is reputed to have about 170 million people. But if you look at the last 30 to 50 years, there's been very little that has been done during that period of time. The point here is that the growth of infrastructure has not kept pace with the growth of population demand. But of course, demand will continue to grow as the population grows. And Nigeria has also entered into a new dimension where we finally, I would say, have found ourselves. And we fully understand that for us to be in our rightful place in the community of international nations, then things have to change. And that therefore means bring our standard of infrastructure to a level that is more competitive with other countries around the world. Now, to achieve that, you need money. And this is not unique to Nigeria, that one, Nigeria is genuinely struggling to fund its entire infrastructure need. And that two, Nigeria is therefore looking at alternative ways beyond government providing the funds to do this. And that's where private investment comes in. And that ties nicely with, of course, the appetite to invest in infrastructure as an asset class. This is happening in many countries in the world. And already in Nigeria, there are examples. I mean, we in ARM were the sponsors of, for example, the Lekki Toll Road concession. That project is still Nigeria's first and I would say only public-private partnership toll road concession. That is a model that demonstrates what can be done. And of course, in the power sector, you're seeing a lot of entrants now making plays in that sector. There's the privatization of erstwhile state-owned companies in the generation as well as the distribution space. So there's a lot of interest in this area, and private investment is definitely here to stay.
Specialized funds have provided or delivered superior returns to plain vanilla funds. Also, if you look at specialized funds, by virtue of the underlying assets for specialized funds, the turnover ratios tend to be lower, hence supporting the attractiveness of this type of fund. So that's really what's triggering the emergence of specialized funds in our market.
The rebound of the stock market reflects the increasing appetite for risk in Nigeria. By mid-May, the bourse was up 28% for the year, after rising 35% in 2012. As traders return to the market after a 3-year bear run, the increasing sophistication of investors is driving the demand for exchange-traded funds and other products. These products are part of the Nigerian Stock Exchange strategic plan to diversify the assets available. Besides equities, investors now have access to bonds, derivatives, and exchange-traded funds.
Specialized funds typically would fall into a category. It could be a fixed income fund, in which case it falls into a bond program. It could be an ETF-based fund. It falls into an ETF program. And if it's a structured product or any kind of special index type product, all of them will fall into a broad category that we call ETFs. But really, it's exchange traded products. So it could be notes, it could be commodities, it could be equity indices and other types of indices. Index linked products. Certainly we'll see a couple of them come by, especially as we develop new solutions around infrastructure financing. I know that the ADB, for example, is doing something across Africa to support the local capital markets with regards to fixed income. So that would be something that we hope will come to Nigeria soon.
Another phenomenon expected to take root in Nigeria is the creation of Islamic funds. With Muslims making up about half of Nigeria's 170 million population, there's a growing appetite for funds that take into account the faith and ethics of investors.
What we noticed is that when we launched our ethical fund in 2006, 2007, there were demands by Muslims for funds that were totally Sharia compliant. So while that is an ethical fund, I will not invest in anything that is deemed unethical, ammunition, tobacco, breweries, and things like that. The standard is higher for a Sharia compliant fund or Sharia compliant portfolio. And basically what that does is that it screens out banking, because interest banking, you're not allowed to do that. You could buy sukuk investments or equities that are screened. And that means that they must have said low gearing, It can't be banking. It can't also, are deemed to have done anything that is against the principle of Islam. So he has a Sharia Advisory Council and an independent Sharia advisor as well. And there's a governance meeting every half year, but that is supposed to be, tailored to the Muslim, population specifically, because we've seen a demand. But as well, for anybody that might want to invest, ironically, that is our best performing fund yet to date now, just because, the sectors that fund has invested in has done quite well.
We've had Islamic funds with us for some time, but now we're seeing a variant of what is existing there, because I think the section of the population would only invest in that kind of investments.
We're working on an equity ETF, and we're also working with a specialized fund manager on an Islamic ETF. The important thing for these funds is to ensure the proper structure is in place for long-term sustainability and viability, and that's what we're doing. But very shortly, these products will come into the market.
Foreign investors that have become major players in Nigeria's stock market are now taking their interest to the next level by creating specialized funds focused on the bourse.
Currently, we're processing 12 applications, and this cuts across infrastructure funds, private equity, ETFs, index funds, across the board. And it's from the upper end of the continuum. We have a fund as large as 20 billion naira. You have some very small funds, 1 billion naira. Then some of them are actually denominated in dollars. We have a fund of $250 million. We have a fund of $1 million. And another $12 million. So, it's varied. You have the small funds, you have the big funds.
Well, we see already some foreign investors who have taken positions in Nigeria today. I mean, when we invested, for example, in the Lekki Toll Road, we had as our co-shareholders there, the African Infrastructure Investment Fund, which is a Macquarie fund that is based out of South Africa. And Macquarie are, arguably the largest investors in infrastructure worldwide.
Capital will be deployed where they can get a return. So the country is now serious about reforms as well. So when you, take the government, for instance, and what is happening in the power sector. Now these are huge projects that require lots of funding. And of course, the government has also more or less acceded that, by partially privatizing or fully privatizing some of the generation or distribution plants, that those things are best led by private sector. So what we're saying is that there are now opportunities to pool monies and for people to actually invest. And because of what happened in the telecom industry, a lot of people are mindful of that success story, and whereby early investors, made a lot of money, and you've seen the growth from 0 to over 100 million subscribers. So because we see that Nigeria has the opportunity of more or less double or tripling generation, strengthening the distribution, which would literally affect lives, and of course the quality of service will get better. So from roads, bridges, so there's so many things. So we think that even the foreign institutions realize that, but I think the challenge has always been structuring these things in an appropriate manner or fashion that will make it investable.
Other specialized funds currently being considered by the SEC are private equity funds focused on the hospitality and retail sectors.
Venture capital, it's been there, but in recent times we've been getting a lot of inquiries and fund managers coming to register as venture capital managers because they want to float a venture capital fund. Private equity, that's so popular. We've had a lot of applications, and we have also had a lot of inquiries.
Coming up, we examine the case for infrastructure funds and address some concerns around their popularity and chances of success in the Nigerian market.